Welcome to the Business Trendsetter podcast, where we talk about trends and how to use them to grow your business. My name is Manny Turan.
And I'm Adam Hartung.
We are Spark Partners. We help lots of businesses to grow by teaching them about trends, about opening their eyes to what's happening around the world. We are not financial advisors, but we talk about stocks as it pertains to watching trends in the market. And as you see here, I'm sporting a mustache for Halloween today. And I'm certainly one thing I do once a year. So this is obviously a change from the normal Manny look. But one thing we were talking here a few minutes ago, Adam, when we do our pre-meeting, you mentioned, a bullish factoring when we talk about some of the FANG stocks. And I just imagine myself in a matador suit, playing with the bulls here with the FANG stocks. So I know that Facebook has been on the ropes the past month or two, and the stock has took a nosedive. So I want to get some thoughts here regarding why it's there. I know we talked about that 6 months ago or so. We talked about the whole transition from Facebook to Meta, and of course we've talked about Google and Alphabet and all that. So what's happening right now, and what should a business owner be doing in looking at those FANG stocks?
Yeah, I think it was about 4 years ago, I wrote the ebook, Facebook, The Making of a Great Company. And that is available on Amazon if you'd like to download it there. I actually think you can get it for free. At most, it's 99 cents. But you also can download it from us if you want to get a copy by contacting Manny or I will be glad to give you one. And in Facebook, The Making of a Great Company, I chronicled the history of the company and the decisions they'd done correctly that allowed them to create social media the way they did and consistently beat back the competition from MySpace all the way through as they grew into Instagram and WhatsApp and the great decisions they made. And, I was always telling people that I am long the stock. I don't recommend stocks to people, but I was long the stock. And I think it was about 6 months, maybe a little more ago, Manny, that you and I did a podcast. We talked about Facebook. And at the time, Facebook had changed its name from Facebook to Meta. And the CEO, Zuckerberg, had said that the metaverse was the future of the company. And, we had a discussion about whether or not that was smart to change the name of the company and whether it was smart to be making these big investments in Meta and where we should go. And at that time, once again, I said, hey, look, I'm bullish on the company. And what I pointed out at that time was that if you took a look at things like not only the number of new users that were coming to the platform, but like the sales per user, what was their average sale per month per user in different markets. And what we saw was that the sales were going up and the sales per user were going up. They were getting more out of the users they had, even though they were getting where they had almost the entire world on the platform. So I continued to remain bullish. And I said, I still think it's a great company doing well. I got oversold. Well, now what's happened is the stock just really got hammered.
Yep.
And from a peak of $350 a share, it's down to something like $90 a share. Just an amazing wipeout of value in one calendar year. In a matter of about 7 months, we've seen this enormous value destruction that's happened. And so, I think it would be natural for somebody to say, well, Adam, did you get it right? Did you get it wrong? Where are you? And so I took the time to go back and take a look. And again, the biggest thing that I look at are growth stalls. When you have a growth just covers a multitude of sins. If you're selling stuff, you got cash coming in the door, you can make all kinds of mistakes and still be successful. If you don't have growth, then you got to be so tight-wired and be careful how you spend your money. And it's very hard to grow. And if you make a mistake, you can get walloped, right? So growth covers a multitude of sins. And Facebook or Meta was a company that had just had ongoing, continuous, good growth. And that was certainly true all the way up as we got into the June of this year. But what I did is I had to go back and revisit this. Now, again, I want to talk about what is a growth stall. A growth stall is where you have reducing sales, okay? So if you've got a company that doesn't really have seasonality, we just look quarter to quarter to quarter. How are you doing? Are you selling more each quarter as it goes along? But some companies do have true seasonality. So take, for example, Meta with Facebook, Google, Apple, they have real seasonality. They sell a lot more in one quarter than others. If you're advertising oriented, like these platforms are, then the fourth calendar quarter is always a lot bigger than the other quarters. So it's quarter to quarter can have not as much meaning as looking at year over year. Well, as we got to June, where we were, back in March, we ended up March, and the revenues were at Meta were $28 billion for the quarter, $27.9 billion for the quarter. So revenues were up 6.6% versus a year ago. We get into June, and it's $288 billion. I'm sorry, $28.8 billion. So revenues are still up 1 year versus a year ago. So we've gone up quarter to quarter from March to June, and we're still ahead of the previous year. And so now this is when people are ringing the alarms in June. Right now, it's the end of October, right? So we've only gone about 4 or 5 months, and we got people screaming. But the stock had fallen, and I said, hang on. We don't have indications we have a problem. Now things have changed. In this current quarter, the revenues declined from $28.8 billion to $27.7 billion. So we have a quarter-to-quarter drop. Now, that's just one quarter, so that's not a growth stall. But we've dropped versus a year ago. So in June versus a year ago, we were down 1%. That 28.8 was down 1% versus 2021. This quarter, the 27.4 is down 4.5% versus a year ago. So we've got 2 consecutive quarters versus a year ago of declines. Now, here's where I really catch on to the worrisome issue, which is the company's projections. This isn't analysts. This is the company itself saying that the fourth quarter, or that quarter that ends in December, is going to have revenues of 30 to 32 billion. Now, 30 to 32 billion is greater than the current quarter of 27, but 30 to 32 is less than the 33.7 billion of last year. So if we took the midpoint of that, revenues are going to be down 6% year over year. So in the quarter ended September, we're down 4.5% versus year over year. In December, we're looking at that being down 6% versus year over year. And yes, we have a growth stall. Now, remember the study that I did back in the 2005 range, which we've updated in 2010, and we updated again prior to the podcast, prior to the pandemic. We're constantly updating this data for its accuracy. But what we discovered was that when you have just 2 consecutive quarters of declining revenues and you hit a growth stall, you only have about a 7% probability of being a thriving organization. Now, that doesn't mean you're going out of business, but your opportunities or likelihood that you'll thrive go way down. In fact, about a third of the companies are going to just really get plastered in the next, not even make it but a couple more years. And then about another third of the companies are just going to kind of heave-ho around for 5, 6, 7 years before they get plastered. And then about another third of the companies are just going to have, nothing going on for about 10 years, up and down, kind of a GM sort of existence, but nothing exciting. And so only 7% really do well after that. And we now have that happening. So I'm worried. And I would tell everybody out there, I've not sold any Facebook shares. Again, I think it'd be wrong for me to be bullish on the stock and tell people, I'm not an advisor, but hey, I own this stock. So, I want to be clear now that I'm saying that I would not recommend to anybody that go buy this stock today. Now, there's a trader's opportunity. The stock's $90. I don't think the company's going out of business anytime soon. It's a big company, a lot of customers. I don't think they're going to go out of business. So they're almost trading the price at $90 is like as if they're going to go out of business. But I'm not a trader, and I don't want to tell people a trader. I don't want to get on this podcast every 2-3 months and say this is my latest thinking about the price of Netflix. I mean, that's Jim Cramer, Mad Money, CNBC kinds of people. Yeah. I mean, I want to talk to people about a stock. I want to say, hey, look, this is a great company. Buy it, put it in your IRA. Don't worry about it for 5, 6, 7 years. Those are the kinds of companies that I believe investing in. You invest. Saying, I'm not going to look at quarter-to-quarter results. It's a great company. It's going to go forward. Right now, we have real reasons to worry about whether or not Facebook is a great company anymore. I would be very slow to buy up the stock. Now, if you want to be a trader and say, hey, I think it's really cheap and it's going to go up, hey, okay, do that. Maybe own it 6 weeks, 6 months. I don't know, whatever. That's trading. I don't tell people to trade. I don't tell people how to trade. But I would say that I would be worried about being a long-term investor here. Why? Okay, the leadership, and we're largely looking at Mark Zuckerberg here, should have realized that you can't go if you're going to go out and do metaverse and you're going to go do the Oculus goggles, which their Oculus goggles are the leader in the marketplace. That's great. And you can spend money on that. That's great. I love people that develop whole new markets. I mean, look at what Apple did with the iPad, and look what they did with the iPod, the iPhone and all the applications. It is great to spend. Look at what Microsoft's done developing Azure and their cloud-based business. Look what Amazon has done developing AWS. It's great to go off and develop new businesses, but those companies did those things while they were growing their revenues. The markets they were in and associated markets allowed them to constantly grow their revenues while they're making the investment in the next big thing. What we see here is, for some reason, Facebook's not continuing to grow its revenues. It's not got its eye on the revenue ball. Now, I don't know. Why aren't they out there just banging away, getting more revenues on WhatsApp? People have long said that they've not fully monetized the WhatsApp application. I've read a lot about how people think there are more opportunities to get more money out of Instagram, and why they're not banging the door to make sure they're getting more advertiser dollars for the traditional Facebook platform. These are all the things they have to do, because you have to keep growing your revenue. And if you want to keep trying to develop the metaverse, you got to grow your revenue somewhere. Now, maybe you can say, I know the metaverse so well that I'm going to have the killer app, I'm going to launch it, and I'm going to be greatly successful. We saw that with the iPod. Yeah. It was launched off. It went off into music. Playing music off an iPod was a killer app right from the beginning. The product was wildly successful, made a lot of money, and helped Apple out. Now, I wish that was what was happening with Facebook, but we're not hearing that. We're not. We hear a lot of people say it's technically a great product. It works really well, but I'm not reading anywhere, oh, here's the killer app that's going to get Manny Turan and Adam Hartung using the metaverse in the next 3 months. Yeah. So we have a revenue problem. We have a real revenue problem with Facebook.
Do you think that in any part of this, the growth of TikTok has eaten into the growth of Facebook / Instagram? There's a lot of indications that that's a new platform.
Yeah, we have a lot of platforms out there that people can use, as you said. So Facebook, Instagram, and WhatsApp represent about 35 to 40% of the entire internet. Then we've got other applications like Pinterest and, as you said, TikTok. We've got Slack. We've got Snap. And we've got Twitter, right? Twitter in the news right now as well. So there's other platforms out there. What I want to point back is that you can competitively look at these platforms and say which is better than the other one. But before you get into that deep analysis, just simply put, where are the dollars going? Right now, TikTok's not really growing its revenue that bad. I look at all those other platforms, and all of them have issues, including Twitter, which Elon Musk just bought. They all have some revenue problems. So does that mean that people are going to quit using these social media platforms? I don't think so. I think what we have here is more an issue of the people that are leading the marketplace not doing a good job of managing the business. So, I always talk about strategy versus management. Managing is when you look and you run your value delivery system very well. And what I'm seeing here is Facebook, which has made a lot of mistakes over time with its Instagram and its WhatsApp platforms. They've now to the point was kind of like, look, you need to be good at running your delivery system. You got to be better at running Facebook. You beat MySpace, but TikTok's out there. There's a lot of other platforms out there. What are you doing to make sure you get advertisers on your revenue, on your platforms? And what we're hearing is not enough. Not enough. In fact, there's all kinds of back channel communication in the tech press about how everybody views the metaverse projects and Oculus as being pet projects of the CEO, and therefore their attention is getting moved. Now, remember, again, part of the whole approach to success in a growth company is you have people that run the business that's doing well, and you have to have people in white space. The people in white space dedicate their time to building the new thing. The people that aren't in white space dedicate their time to running a great business. Part of what's happening that I'm hearing behind the scenes at Meta is that the people that are supposed to be dedicated to running Facebook, Instagram, WhatsApp platforms, getting the revenues out of the users, getting revenues out of the advertisers, are getting diverted. And they're spending time thinking about using Oculus. They're being forced to go do meetings with Oculus headsets when they don't need to, when they're like, okay, I could have that meeting in person or by phone or by Zoom or by Skype or another technology. They're getting pushed to use this new technology, which is okay. I mean, you can ask people to do it. But if it reduces productivity and diverts attention, so instead of spending time getting your job done, you're playing with the new technology that should be dealt with in white space, that's diverting and hurting the value delivery system of the moneymaker.
That's a really good topic to explore even deeper. Is we talk about white space or blank space. We call it blank space sometimes as well. We talk about that as a new way of methodology to be able to look at new technologies, new markets, and build a team around that can be isolated from the rest of the team and so forth. Now, how do you strike a balance between your value delivery or your quote unquote core business and going off into this blank space or white space? Do you think that they're not segregating them enough and there's too much intermingling of the two?
Yeah, so you might remember for years, Zuckerberg had a really strong number two with a person named Sheryl Sandberg. And there has been a lot of credit to the fact that Mark's not academically trained in business. He's more of a visionary, perhaps. And that Sheryl Sandberg was more traditionally trained in business. She was a great chief operating officer. For whatever reason, apparently her position got diminished, other people's positions, the power positions changed in the company, and Sheryl Sandberg found her way out of the company. And we don't hear that there's a strong chief operating officer managing that underlying Facebook, Instagram, WhatsApp business anymore. And so that's where they're starting to bleed. Now what you have is you don't have somebody saying, listen, yes, we're developing the metaverse over there. Let those people go make that a wild success. Keep your ear. If you think up ideas, send it to them. But your job is to sell more stuff. Your job is to make sure we get the ad dollars, to get the users to keep moving forward. Don't let yourself be diverted. And I think we have, so now there's all big calls that started 6 months ago. People want to replace Zuckerberg. It's impossible because he has controlling voting shares in the company. So the board can't fire the guy. But there's calls for him to get out. It looks like the company is a bit out of control, like it's not being well managed. And as I always say, great strategy has to be built on a well-managed company. Being good at operations is not a strategy, it's a requirement. And so if you're out there saying we're not doing the best job we can for advertisers on our three platforms, then you're leaving the door open for other companies, like we just mentioned a whole bunch of names, they can grab more of those ad dollars. And they're just leaving it for them because you're not focused, you're not paying attention to it.
Do you think
so? Great companies, as we explained before in the old Facebook, and as I do all my presentations, involve this ability to continuously grow your revenues. Don't ever lose sight of growing your revenues. Make sure that your current business is constantly figuring out how to make more revenues. Meanwhile, utilize these other teams to deal with punctuated equilibriums. In other words, big step changes. The metaverse could be a big step change. Let's hope it is. I mean, I'm excited about that. But we haven't yet produced the revenues to prove that it is. And until some team or group of people make that happen, we have to realize that we've got to get the revenues from somewhere. And in this case, Facebook, it seems to have gotten itself mixed up. It seems to, the guy manning the rudder, which is Zuckerberg, is not manning the rudder properly. And he doesn't have the strong chief operating officer that's continuing to drive it. Is this fixable? Sure, it's fixable. There's all people creating great operations. Yeah, there are great operators out there, right? There's a lot of them. Could somebody come in and improve the operations of the company? I believe probably yes.
How much of this do you think is the recession or the looming recession or inflation?
Well, again, we've got the pandemic followed by rising interest rates, followed by inflation, which we've talked about in previous pandemics. I look at that and I say, okay, that's an unstable or punctuated equilibrium in the economy. That creates opportunity. And Meta should be taking advantage of that opportunity to grow. Apple is. We see other companies that are doing that. They're taking advantage of it for growth. There seems to be a lot of, let's consider this an exceptional situation. Great. The pandemic allowed our revenues to jump so much that now our expectation should be a fallback. No. If inflation's 8%, your revenues aren't allowed to fall back. You're dying at greater than an 8% rate. If inflation's 8% and you're getting negative revenue growth, then you're dying at a rate of like 10% or more. So that's just a horrible way to try to explain your way out of it. And the thing I would really worry about is we're now hearing rumors that Zuckerberg's going to entertain some cost cutting and headcount reductions. That's death of the company. If they go down that road, they're not going to be able to maintain their competitive position. They're going to leave the door open again and again and again for competitors. So there's a lot of reasons to be worried about Facebook. And I want to notice how fast it happened. Okay, I tend to look out in the future. I see these opportunities. I see where they're going. The one thing that I took for granted here was that the company would continue to operate as well as it had in the past. They did not do that. Again, that's the ante of the game. You've got to constantly run that business well. If you take your eye off that ball, somebody's not managing that for continued growth, then the metaverse can be the greatest thing ever. But you're likely to miss it because you didn't keep your revenues growing so you could build the bridge to that next platform. And that's just, that should never have happened. And it's showing some really poor judgment on the part of the leadership team. I want to blame it all on Zuckerberg, but I understand he's a pretty strong CEO. But he was a leadership team there. Who was talking? Who was at the table? What were the conversations? And I sure as the world can tell you that I wish Sheryl Sandberg was still there, because clearly since she's left, there's been some problems in terms of just running a great company. Yeah. So, I'm not apologetic for the positions that I took in the past, but I'm angry. I'm angry that the CEO and the leadership team allowed the company to get into this kind of a position. It was foolhardy.
I agree. I think you mentioned something there. We mentioned in the past about, the value delivery, the operational excellence, running the business well is the ante to play the game. And, Adam and I, we're strategists. We're looking out in the future. We're helping you to identify what products and services will align with the market and the trends. And that's kind of what we do. And, sometimes we get asked about the value delivery or how can I run my business better on the inside. And although that's not generally how we operate or how we work with companies, it's still very important to realize that you've got to maintain that and you've got to bring in resources that will be able to allow you to do that. And so, if you bring Adam and I in to help your company, we can definitely bring the right resources if you have some operational issues or problems or things you want to improve.
And I think right off the get-go, if we were talking to a company and we saw this sort of trip start happening in terms of revenues and people start explaining away revenue problems, saying, well, last year was the pandemic year, artificially high revenues, I would be all over that. I mean, I'd be all over that like the proverbial smell on a skunk, right? Just like, let's make sure you understand, do not make these excuses. I do want to take a little bit of time before we wrap up this pandemic, because we talk a lot about the old fangs, Facebook, Apple, Amazon, Netflix, and Google. To kind of take a look at the others and see where they are right now, because the whole sector has been clobbered in a really big way. Google announced its results. Now, remember, anytime somebody announces results, the analysts tend to focus a lot more on earnings per share than anything else. Earnings per share is the most manipulated number in the history of mankind. The second most manipulated is EBITDA, earnings before interest, taxes, and depreciation. But by adding the share account on top of that, you really make it just a very manipulated number. Yeah. What I always look at are the revenues. Where are the revenues going? How are the revenues performing? And Google got beat up, and people are wondering about its performance. Well, in the quarter ended September, revenues were $69.1 billion, up 6% versus a year ago. On June of this year, revenues were $69.7 billion, up 12.6% versus a year ago. March, they were $68 billion, up 23% versus a year ago. So what we have is quarter over quarter, we've got, big growth gains, including the last quarter at 6%. Now, again, they tend to be seasonal. That's why I look at year over year versus quarter to quarter. But we did have from Q2 to Q3, from June to September, a very small decline from 69.7 to 69.1. But we're seeing that they expect that to reverse, and will be a strong fourth quarter to $76 billion, which would exceed 21, which was $75 billion. So we're looking for a 2% year-over-year revenue gain, and back again to quarter versus quarter revenue growth. So people that are beating up on Google, hey, we don't see it there, and they don't seem to have the operating management issues that we saw over at Meta. Take a minute, take a look at Amazon. Amazon got really clobbered as well. People are saying whether or not Amazon's growing or not growing. They're saying the rate of growth's down. Well, again, let's get practical. Let's look at the real numbers. In Q3, ended September, revenues $127 billion for the quarter, up 14.7% year over year. Again, very seasonal. It's a retail company. It's very seasonal. We look year versus last year. Then the June quarter, it was $121 billion, which was up 7% versus the prior year. In the March quarter, 116 billion was up 7% versus the previous year. The projections are for 140 to 148 billion for the fourth quarter of the year, which will be up 5% versus a year ago. So we're seeing quarter over quarter growth. We're also seeing quarter versus previous year growth. So all the people that are screaming and yelling, be worried, I don't see it in the numbers here yet. There's nothing that indicates that these guys are falling out of bed. And let's hope they don't make a meta kind of mistake of losing track of the base business. Yeah. Turning to Apple. Apple's been kind of a big winner. Their stock's done best of all of these stocks. In September, at $90 billion of revenue, they were up 8% versus a year ago. Q2 was $83 billion, up 2% versus a year ago. And Q1 of March was $97 billion, up 8.6% versus a year ago. Now, their big quarters are obviously the last calendar quarter and the first calendar quarter because all the Christmas sales of computers and watches and that kind of thing. So what we see is that they did really well the first quarter, of this year, 2022. For 2023, Apple doesn't make projections, so you have to go get analyst estimates. Their best estimate's 127 billion, which would be up 2.4% versus a year ago. So once again, we don't see any decline. We're seeing a continuous increase. Their numbers look as good as Alphabet's numbers. So people that are all beat up on Alphabet and they put the stock price down, but they're not beat up on Apple, I'd say, look, the numbers don't indicate that. Yeah. The numbers don't indicate the problem. The next one we'll take a look at, the last one, is Netflix. So Netflix got really clobbered, again, lost 80% of its value. Netflix has some seasonality, but not as much, okay? But in Netflix's case, we had the revenues of the most recent quarter, September, this is going to get really nitty, but 7.93 billion, up 5%. June quarter was 7.97 billion, up 8.5%. Q1 was 7.87 billion, up 10%. So year over year, the company's growing here in this range of 5 to 10%. Now, the numbers quarter to quarter are really tight. And so that is something to pay attention to. And I'd sit here and say, okay, of all of these, this is the one I'd, again, be worried about. I'd be paying a lot of attention to it because our revenues are very tight. When you get these revenue differences that are within, $1 billion, within $100 million on these multi-billion-dollar companies, we have that window dressing effect. I mean, executives and companies can change the accounting conventions to raise revenues, lower revenues, just based upon, well, when was shipments, when do we declare revenue versus inventory, that kind of thing. There's manipulation in that. And every publicly traded company does those manipulations to tell the story they want to tell. All of these are within the error of manipulation. So I can't tell you for sure that their revenues are flat, up, or down from quarter to quarter. But I'll pay attention. I'd sure pay a lot of attention because we're trying to see if a track record develops here. If the track record, we keep getting these consistent numbers that, it's just right around the fuzzy edges, then, yeah, we want to be concerned. The projections that they have for Q4 are to grow to 7.8 billion, which would be up 1% versus next year. So this next quarter is really critical for Netflix. If Netflix has a bad quarter, then they could fall into the meta point of view, and we'd want to be concerned because they're going through a pivot. Again, you and I have done these podcasts. I've talked about the fact that the next big thing for Netflix isn't just getting rid of people that are stealing, sharing passwords and putting out platforms that add advertising. I think that's on the margin good operations, which is, again, where Meta messed up. Yes. So we're seeing some efforts at really good operations here. But for Netflix to be the great company it has been, we got to get this gaming thing going. Remember, I keep saying ever since 2021, they've talked about the pivot, getting into gaming, being big at gaming. Yeah. They went from delivering DVDs and CDs to streaming. They went from streaming to making their own content. Those big steps, those punctuated equilibriums allowed them to be this really great company in delivering entertainment.
One thing
right now, they've got to get after gaming, and they've got to demonstrate they can generate some gaming revenue while they're making these small improvements, growing the base business. If we can get there, that's great. If they miss it and they can't keep the platform producing to build the black bridge into gaming, then we got something to be concerned. If they can make a step in gaming and start getting the gaming revenues to grow, then we can look at the company, retrench all of its losses, and become another, back to where it was a year ago.
One thing that I want to talk about before we log off for today, we don't have a lot of time, but I do want to talk about another piece of news. That is, of course, Elon Musk taking the helm and the reins of Twitter. I know that you have historically been very popular in Twitter, and we talked about Twitter a few times. And so let's talk about what Elon's doing right now with it, and maybe speculate on what he might be doing to, again, address these revenue issues that they've all been having.
Yeah, so Twitter's long time had a revenue problem. Costello, who is, in my opinion, a great CEO of the company, he got very good at managing, getting the revenues up, growing the revenues. He grew the user base, but he really grew revenues per user, and very successful at that. And then he was removed by the original founding CEO, Jack Dorsey, who I have no value for at all. Certainly not in the role he had at Twitter. He had no idea how to grow the company, and so the company languished. Now here comes Elon Musk. He's parachuting into the company. Everything that we're hearing, from the gossip level to what's being reported in reputable organizations like the San Francisco newspaper, Sacramento newspaper, to television reports from reputable television, CNN, et cetera, is that he's looking at a massive layoff, as much as 25% of the company. Number two is he's already gotten rid of the top three people of the company, and he's brought in some outsiders that are friends of his, but he's not yet stated a strategy. So we have a new owner who has no stated strategy. He hasn't said how he's going to grow the revenues. He hasn't said, okay, here's this thing I'm going to do that's going to get the revenues flowing in. We're hearing he's going to cut costs, and they're talking about putting a subscription fee on Twitter now. So you'd have to pay to be on the platform. Notice none of the other platforms you pay to be on. You can upgrade your status on Instagram, but some of these platforms have a base and you can add to it. But all of them have a platform you can get on for free. We're talking here about subscription fees to a platform that hasn't grown, right? And generally, if you talk to people about Twitter, the average person doesn't do it. When I go around giving talks to CEOs of small and mid-sized companies, most of them do very little to no Twitter activity at all. The dominant user of Twitter is the news media, who likes to pick up on things, announcements, because we often we often make announcements early. You look at companies, when they issue a press release, they'll put out a tweet that they made a press release. So it's a quick, easy way for people to get onto a follow list and track companies, get news. So the news media have historically been big users of it. And again, flamboyant personalities, Donald Trump, Margaret Green, these kinds of people get a lot of attention on that platform. But there's no statement here. There's nothing coming out of Elon Musk's mouth or anybody around him of, here's what we're going to do that's going to bring a lot of people to our platform, and we're going to get a lot of advertisers. We're not hearing that at all. A lot of arguments about who's going to be allowed on the platform, whether or not they're going to control speech or they're going to edit speech. Right now, I can say that most people call Twitter a sewer. It's got to get cleaned up if it's going to get on the growth bandwagon. It's got to find users that really want to be there. And then they got to get those users growing in a way that they get advertisers. They need advertisers desperately. They can put a subscription fee out there, but as an advertiser-based program, they're never going to go back and be an HBO or a Netflix that's all subscriber fee-based. They're going to always have advertisers. Can they get the advertisers back? Yeah. It's in a locked-in battle against Facebook and Instagram and all those other guys we talked about before. I'm not optimistic. And I think the Twitter investors had a great opportunity here to get out and get some money, and they loaded it on Elon Musk. And I think there's a very real probability that this will become a platform that's sort of a hobbyist platform. If I don't see, definitely, if it gets a lot more hate speech and it gets a lot more, just unvaluable stuff. Right? Yeah. Well, I'm not talking to people about innovation. I'm not talking about growth. I'm talking about, things that are lies or things that are fake news or things that are just, not part of helping me be a good businessman. If I have to sort through a lot of that to try to get helpful stuff, I'll quit. I'm not going to put a lot of energy into it.
We're going to be watching this as it progresses. Obviously, we're here as a service to you, our listeners and viewers. So we'll be watching this Twitter strategy unfold and be implemented, and it will definitely be talked about in the future as more time passes and we're able to see things sort of as they happen. And you mentioned earlier they haven't really released their strategy yet, so we'll definitely keep an eye on that. Any final thoughts today, Adam, before we sign off?
I think people need to remember, keep your eyes on the revenue. That's what we should learn from this debacle at Meta, is that they didn't keep their eye on growing the revenue, and now they've entered in a really big hole, really big trouble. And if you keep your eye on the revenue, that's how you avoid that problem.
Absolutely. Keep your eye on the revenue. Thanks again for your time, and we'll talk to you next week.
Thanks.
Cheers.